All right, contrary to what many people believe, the Fed doesn't really set interest rate policy. The Fed follows the market. So in the futures market, whatever the market is pricing in, and by that I mean a 75% or greater chance, then the Fed is going to, they're not going to start throwing rocks in the China shop. So not in a market as big as and as important as the Treasury market. So if the futures are telling the Fed that they're going to raise or cut 50 basis points, then that's exactly what the Fed's going to do. So the market knows usually months in advance and always within a week or so exactly what the Fed's going to do, because the market will have priced it in, and then the Fed will do exactly what the market tells it to do. So here's what changed. After the November 2nd Fed meeting, the market realized that the aggressive rate hiking cycle was done. And it immediately, the dollar started to collapse, because that cycle, the 75-point hikes were done. The market immediately started pricing in only a 50 basis point hike for December, and that's exactly what happened. It's pricing in a 25-point basis hike for February. More than likely, that is what is going to happen. And so at that point, once the market realized that the aggressive rate hiking cycle was done, the dollar started to collapse. That was what was propping the dollar up, was that aggressive rate hiking cycle, and that had come to an end with that final 75 point hike on November 2nd. And so now here was our confirmation. I believe it was the 14th. It was either the 13th or the 14th was the last Fed meeting, and that's exactly what happened. The Fed only cut 50 basis points. The market has had a very pitiful little rally, and because it's anticipating that going to 25, and then what's going to happen after 25, of course, is going to be a pause, and then they're going to start cutting rates. And so all we could get after that 50 basis point hike was just this sideways churn that's kind of formed this triangle consolidation, and today the dollar's trying to break down out of that continuation pattern. So even though one can rationalize that the Fed is still hiking rates and that the dollar should rally, it's not going to, because once that 75 basis point hiking cycle ended, then that was it. The dollar is done. And that's what we're seeing here. We're getting the collapse of this kind of a parabolic move in the dollar. And so gold has started to sniff that out here. So here was the the last 75 point basis hike, and then 2 days later the market realized that the Fed was done. The rate hiking cycle was over. It was going to slow down, stop, and then turn around, and so gold took off, and that's where we're at now. And gold is waiting for that breakdown below the major support. And let me go back to the dollar and show you that. All right, so here's a longer term chart of the dollar, and you can see we've got a major support zone right here. Now, normally you would expect that an asset would rally off that support zone. The problem is that we've got, I wouldn't call it a true bubble, but this is definitely a parabolic bubble-ish structure that got just stretched insanely far above this 200-week moving average. And now this the rate hiking cycle is ending, and this parabolic structure is starting to collapse. And so you can see again this morning, price is trying to break through this support. So instead of bouncing off this like you would normally expect in a market that wasn't collapsing a parabolic structure, this is trying to break through that structure without really even bouncing. And you can also see here that it's let me zoom in just a bit. You can see here that this 50 week moving average, which has been kind of weak support here for a couple of weeks, is threatening to get broken this week. And if I widen this back out here again, you can see the dollar hasn't been below that 50-week moving average in about a year and a half. And this has been a pretty strong support and resistance zone for the dollar. So this is an average that I want to pay attention to. You can see support, support, support here, resistance there. Once it broke it, then never tested again until we're in the process of now breaking through it. All right, and then if I go over to gold on the weekly chart, you can see the cartel has been fighting tooth and nail to try and stop gold from getting above that 50-week moving average. Not quite as important of an average for gold. You can see it kind of erratically moves above and below, but I mean it was clear here that the cartel has been trying to keep gold pinned below that, and unless they have a huge attack that succeeds today, they're gonna lose that battle today. Looks like they are going to lose that battle today, as gold is appears to be going to close above that. So let me go to the daily chart. So right here on the FOMC meeting, like I said, gold. The market and the gold traders realized that the rate hiking cycle was done, and gold took off, and I'm pretty sure this is going to turn out to be a final 8-year cycle low, because I don't think the dollar is going to recover unless for some reason it believes that the Fed is going to reverse course and begin an aggressive rate hiking cycle all over again, and I just don't think that's going to happen. And so while the dollar has been churning sideways, and the euro is in the process of trying to break out, and I guess I could show you that real quick as well. All right, so here's the euro, and you can see just multiple attempts to break through this resistance zone here. I think it's going to break through this soon. This doesn't look like a topping pattern to me. Again, there's not going to be a change in the Fed policy, and they've already shown their hand, and the Fed policy is going in the wrong direction. If for this to break down and maybe get a retest of these lows or something. So I anticipate that this is not a topping pattern. This is repeated tests of resistance, and at some point here soon, this is going to break through, and then when it does, the cartel is not going to be able to hold gold down any further. So like I said in my last video, I think gold is where you want to be this year. I'm pretty sure that it has completed its 8-year cycle low, and we're now in the advancing phase of a new 8-year cycle, and more than likely this 8-year cycle is where we're going to get our bubble phase in gold. Let me widen this chart of gold out a bit here. All right, so this 8-year cycle, from this 8-year cycle low here in 2008 to this top, this was the top of the last bull market. Then the previous or the 8-year cycle that I think is just finished right here, this was it was a bear market. Price did go below the 200-week moving average. It turned the 200-week moving average back down, but it has been mostly a consolidation phase. So this 8-year cycle has been mostly a consolidation phase, but the bull market obviously still intact, as we did make a higher high. But mostly just a long 8-year, actually I guess it was about 7 years. Sometimes an 8-year cycle will shrink a little bit, but mostly just a very long consolidation phase. And most of you know the rule: the bigger the base, the higher in space. So that's why I say I think this 8-year cycle is going to be the one where we get our bubble phase in gold. Once we get a breakout above this high here, and probably even once we get a breakout above 2,000, then it's going to be game on. the bubble phase in gold and especially silver can progress very rapidly. So I would say there's a very good possibility that once gold breaks out above these all-time highs, and then, considering all the manipulation of the gold market that has damaged the physical market, especially in silver, within the next year and a half, 2 years, we could get our bubble top, and that is going to occur. $5,000 gold is going to be a piece of cake, and considering all the manipulation and the size of this base, 10,000 is not out of the question. I'm on record saying $100 silver is a piece of cake. I think $200 to $500 silver is probably within reason, and that can happen very quickly in silver. It could take the better part of a year and a half to get to 100 in silver, and then it could take 6 to 8 weeks to go from 100 to 500. So gold and silver, I think, is where you want to be in 2008. I'm pretty sure this is a final 8-year cycle low, and we are now in the advancing phase of a new 8-year cycle. And right now, for the last month here, gold has been in this choppy sideways consolidation. This has frustrated many retail traders. They do what they always do. When things don't happen fast enough for them, they get frustrated and they give up, and then they miss the move when it occurs. So this is we're in the process of defeating the cartel, and when that manipulation finally breaks and we get a breakout from this sideways consolidation, there's a good chance we're going to make a similar magnitude move as from this bottom into this consolidation, which means we're probably going to go to 1950 or 2000 once this breakout occurs. So the people that have the patience to wait for this to happen, they can endure the cartel attacks, because there have been many. Obviously every single time gold has tried to get above this 200-day moving average, there's been a big attack by the cartel. 1, 2, 3, 4, another one just the other day. But they're failing. They're not able to. They were able to keep it below the 200 briefly, but now they're failing, and so it's not going to be long here before the cartel can't hold gold down any further, and then we'll get another leg up. And the people that do have some patience and can look at the big picture, understand we're in the advancing phase of a new 8-year cycle, they'll just grit their teeth and weather these attacks and this sideways consolidation, because they know what comes next is another strong push, maybe even all the way up to 2000. And so, those people that can, think logically, not let their emotions get to them, not let the cartel attacks knock them out of their position, they're going to be set up nicely to make a lot of money here in the new year, because gold and silver is where you want to be at in 2023.